Trading Unlocked, and we are here on March 25th, 2020 with a daily Forex market analysis and live trading breakdown for you, and we have a lot to talk about. Boy, the markets are swinging around, right? So we have the disclaimer for you to remind you that this webinar is for illustrative and educational purposes only. Things are in delay here a little bit, so this is not all live, so there's a little bit of a lag for the stream. For the quotes and for the trades and everything. And unless you're part of our signal service, please do not try and duplicate these trades. These trades, you don't know when we're getting in and out or changing stops or targets or what have you. So don't just see a snapshot and think that you should go and try and follow this. This is just to teach you how to manage trades and things like that. But if you want to learn something, there's a book called High Probable Japanese Candlestick Patterns available on Amazon.com in paperback and Kindle version, and through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And with that, let's go to our www.forex-trading-unlocked.com website. We have the workstation page pulled up. There are some numbers. We definitely had some oil numbers that came out today. However, right now with this volatility, except for major economic numbers, which are still lagging and coming out good, we really just have to look at the price action. So what do we have going on here? We have a dollar bull that's been raging for obviously quite some time, but the past couple days it's been under pressure, especially against one of the major components in the dollar index, the British pound US dollar. As you can see, the market made a higher move high from yesterday's trading with a nice little follow-through rally, but it collapsed and now is falling down on its lows and making new lows as we speak. So is this market ready to go back and make new move lows on a weekly basis? Maybe. Or is this going to just be a little pause before it continues its correction higher? Well, that could be the case too. But really what I think is going on is we have the dollar bull. We've had a little reprieve, a little bit of profit taking in the dollar, but with what's going on with the numbers around the world with the coronavirus and stuff like that, there's every reason in the world to believe that the dollar strength will be pretty much remaining in place for at least another week or two, especially with what's going on with the Fed. So now we do have some positions on. We do have one in the pound US dollar. We have some binary options where we have the strike prices of $1.1675, $1.1475. These are below the market, and one at $1.1875. Now we are short all three of these strikes. So right now, one is in the money, and one is just the market is just above break even. And since we are short, we want the market to be below these strike prices when they expire. Or right now, since we already are profitable in the one that we sold earlier today, we started these positions on the 23rd. Today's the 25th. We put on another one. They expire on Friday, so there's 2 days left. So as you can see, the one that we put on today is profitable. The other two have been in the red for the past couple sessions. So we have a couple losers and a couple winners on their binary options positions, and especially we're kind of mixed on our British pound US dollar trade. So right now we are bearish the pound US dollar, and these are just options that we have on. So we're buying time. Those are the strike levels that we're at, and since we sold them, we want the market to be below it. Obviously, if we were bullish, we would have bought them, and then we would want the market to be higher, which all three would be losers. Or actually, right now, two would be winners. One would almost be break even right now, and actually would be just above break even, and then one would be a loser. So either way, we'd be in the same situation. But since we're directionally looking for the market to go down, I think we're hopefully on the right side. So there's our British pound US dollar trade. Right now, our upside pivot is at $1.1974. That's the high of today, right around here. Anything above here has us back on the bullish campaign, and I would say be very careful selling into a rally above there. It's going to get choppy. Right now, the question is, are we having sell-offs as we have a little profit taking for the bulls, and then the strength is coming back, or is this just a corrective rally where we're just having profit taking on the bears, and they're just getting ready to pounce and make new lows again? So let's look at one of our other biggest components of the dollar index, the Euro US dollar, which has been quite the interesting trade as of late. So the pound definitely had a major trend lower with some incredible volatility. The euro has been kind of quiet as well the past couple days, making a little bit higher move high every day except for today. So the pound, where that made a higher move high today, the euro has not. It's still inside the trading range of yesterday with a very small range for today, considering the volatility we've had in the past month. This is one of the smallest range days we have setting up, and we're already into into almost we're over an hour and a half into the U.S. session. So that's quite a change. Let's see, we have 107.60 is the low and 108.49. Wow, that's only an 89 pip range, which that's nothing considering it's been basically 100 and something to upwards of 200 pip ranges a day for, well, as you can see, the past month and a half. So right now we have some Euro US dollar positions on as well. We do not have any in the options markets. However, we do have in the outright directional Forex markets. We are short the Euro US dollar. We've been short this for a while. This goes back to 316. So you can see we've had that on for 9 days. We've just been lowering our stop slowly but surely. The same thing as we are also long the Swiss. We are also long the Canada. We had been in the trade. If you watched our video yesterday, we got stopped out with a profit today, and then the market swung around and went on a swing trade. We got back in on this long trade for the U.S. dollar Canada. So we did make a few pips on the one. We didn't get too much because the market's been hanging on support pretty much for the past week, as you can see. So that one we just had a little nibble, and now we're actually slightly lower on this. We're losing on this trade right now for the U.S. dollar Canada, but that's because the market's just slightly below there. We also are long the U.S. dollar yen. So let's see how these markets are shaping up. So the Euro U.S. dollar, once again, we are short this. We're a bear. That doesn't mean you should follow us. We could be getting out of this. You know, right now we have this pivot here at 108.90. A rally above here takes us off the bearish campaign for a little while for a neutral choppy trade, which becomes very non-directional. It's just a volatility trade, which becomes probably good for range traders with a wide spectrum of how should I say it, for their daily capacity for trading. Like I said, today we have a tight range in pips. It's 90 pips just inside of that, but lately it's been like 200 something pips. So if range traders have widened out their scope beyond what they typically probably are in, then I think you might start to see a chance to sell into new highs and buy into new lows for a little bit with the Euro US dollar. This is the way it looks like it's starting to shape up. Our short doesn't look so good. But we've been short for over a week. You know, we've been short for almost 2 trading weeks. So we'll see. If we keep on correcting higher and jostling around, we'll keep on lowering our stop, and then eventually we'll be out of that one. Or this correction will run out of gas, and we'll be back on making new lows in no time. So right now we are a dollar bull, mostly because of the coronavirus fundamental. What's going on in Europe is it's still exploding. I mean, Italy seems to be slowing down, but Germany is increasing. The UK, even though it's no longer part of the EU, is also having a lot of troubles. So I think that because the U.S. and all the news that's been going on with the Fed and things like that, that's kind of overshadowed those things for a little bit, and you've had a nice correction with the dollar. But don't undercut the dollar. The dollar strength can't come roaring back, or may not just be ready to explode. So be very cautious being a bear of the Euro US dollar. Now here's another reason why I want you to see this. Every day the market, the dollar has been pretty much strong, and then it closes in the US, and then all of a sudden that's when these other currencies take over and the dollar gets sold off. But then ironically, once the US stock market opens up the following day, or 24 hours later, the dollar will be under pressure, and then all of a sudden it starts to rally back. As you can see, the last 3 sessions, the market settled up in the upper half or upper quarter of the range. Today's range is very tight in the Swiss, just like the euro, meaning here we made a higher move high. I think yesterday is a higher move low. Like we would key off our pivots at 97.20 for bears, and then also for bulls 99.05. This market could be at parity, exploding to parity in no time soon. You know, like it really could be very quickly. The fact that we're having such a tight range today, oil numbers are low. The stock market, you know, for the most part, has been higher this morning. It hasn't been that volatile. Even for the last, you know, we had a big rally in the U.S. dollar yesterday in the U.S. stock market. You get your biggest rallies in bear markets. So unless this is a bottom and we're setting the tone for a higher stock market in the U.S., which I think is highly unlikely, I think this is a rally to sell in the short run, even though I'm overall a bull for the U.S. stock market in the long term. But right now it's going to be under pressure for a while. And I think for the dollar, it's like no matter what, you see the devaluation that's going on now. I mean, the Mexican peso, which we're going to get to, and this is why we started with the pound and the euro, and we're dwelling on this is dollar strength here. And you're going to see what I mean here when we look at these other currencies. So once again, the past few sessions, we bounced off of support and settled, even though we were lower, not that much lower than the prior session. So I think that since we're having trouble to really get through support, that this is basing, and we're going to make a run for parity, which obviously we are long the, once again, we are long the Swiss, US dollar Swiss, but we've been long this since the 16th as well. So these are positions just like the JPY. We've had these positions on since the 18th, so you're going back to last week. So these are things that we've been managing. Once again, that's why we stress at the beginning of this webinar, you don't know where we're at in the trade or whether we're already out of it or whatever, so please don't try and copy it. But you can see how we've been managing them through our videos over the past few sessions, let alone week. So now let's get to some other action here. So US dollar JPY, which we are long right now, is buffering up against some nice highs. Remember where it was before all this coronavirus happened. We made higher move highs. Then we tanked here in February into the beginning of March. Look at where we're at right now. Remember, this market was a bull, continually grinding higher. We made this higher move high and then continuously making lower move lows, and what an extreme it was. We filled the gap, well, like nobody's business, and look at how we've had real extreme volatility, and now you can see the momentum. It looks like it's running out of gas, but I think we have a really good chance at still challenging this 112.25 upside breakout pivot. And anything above there, we've had a target of 112.5 to 113 even, and our target was somewhere around the beginning of April into May. You know, just because of the way this market had been grinding before, we figured that if it kept going doing this kind of stuff right here, that it would inch along. We didn't think it would get, we figured it would probably be at 112.5, kind of where we're at right now, and like 113 by sometime in April. And if you look at it, well, here we are. We actually we kind of did exactly what I was looking for, except we had this big hiccup here of a move here. So right now we've made a higher move high, a higher move low in the grand scheme of things. We did stay above the one. Let's see, we were at 101 here. This was 104.04. So yeah, we had taken that one out. Big sideways is what it looks like on the long term, but I think we're now with the daily momentum we have, you know, obviously we're bullish. We have been for over a week. But yeah, I think we have a little bit of upside to go. How far do we have after that? Well, that depends. We have a lot of central bank actions that's been going on, and that's another reason why I think you're going to see this dollar bull continue to reign for a little while. And here's another reason why. Let's look at this trading, another part of this trading zone. We have the Australian dollar, US dollar. As China comes back online, supposedly it's starting to kick in full gear. The question is still, how quickly can they get their supplies from something like Australia? What is the quarantine going on? What is going on with the levels of an outbreak there? We know there's been an uptick in Australia, just what they don't need, and especially if they have to go into a prolonged type of quarantine period for months, and especially, obviously, mining is essential there, and people are distant. But then there's the question of the docks and stuff like that, and getting the staffing they have. If you're running on shortened staff, even if they have things running on full cylinders, that means that it's going to be tough to meet demand and things like that. I think there's a potential for this currency to finally stabilize, but not until we start to see the curve flatten with coronavirus worldwide. Chinese can make all the stuff they want, but if they can't move their goods, you know, really, you know, what are they? They're in no demand to keep factories running and just stockpiling stuff. So, and that's something I don't think you're going to see happening. So maybe right now this correction is starting to erode, especially if we have a big bounce in the dollar once again with another surge. This is another currency. I mean, this volatility is really, it's crazy. It's like this market over here, you can see earlier, look at these ranges. Like, this is like normal trading. Now if we go and just have, because of what's going on in the recent past, look at how tight these ranges look. Does this give you a good idea of what volatility is going on here? So if you don't have an appetite for this kind of swinging action and volatility, please stay away from these markets. And you have to have deep pockets, and you got to have really good buy and sell signals where you stick to your plan, you know your risk, and then you have to just hang on. So right now we are a dollar bull even against the Australian dollar, US dollar. Right now this looks as just a lower move high that is forming. Has it formed today? Who knows? This may be still chopping sideways for a little bit. I think because of China that you're getting to starting to see some stability in Australian dollar, US dollar currency cross. But whether or not that's going to maintain it for the next couple of weeks or months, who knows? That's not the thing we're even trying to predict or look at right now. We're just trying to deal with things on a daily basis. So as far as being bullish, yes, we're in an upside correction, grinding higher, spiked a higher move high today, indicative on a daily basis, higher move highs, higher move lows. The short-term trend is a bull, but you're talking about more of an intraday, only week-long trade. As a whole, this thing is an aggressive bear, so I would look for an opportunity to sell. Range traders especially, you can see like a day like today that as you're making new highs, you wait for new highs for it to pop up a little bit, you sell into them, and then wait for the dollar bull to come back, which seems to have been the case every day so far this week, is that no matter what's going on in these other currencies, the dollar has come back. Obviously it didn't in the Australian dollar, US dollar the past couple sessions, but it did in most of the other currencies, especially the bigger ones. So now New Zealand dollar, US dollar, it looks like pretty much a little bit of a reflection of the Australian dollar, US dollar. And it's doing the same thing today. It made a higher move high. It's slightly lower on the day. This is the same scenario here. It's the same trading zone. They just don't have the wildfires and a lot of all the other problems that Australia has. So I think that if any currency has a chance of stabilizing between the two of them, New Zealand dollar would be more of a neutral, bearish to neutral trade than versus the Australian dollar, which is a very bearish trade. So regrettably, and here's another reason why I want you to take into consideration these lesser crosses, and as this pandemic impacts things, the dollar strength in some of these crosses, it's a big deal in how much it's already invaded the disproportionate relationship from the trend. We have the U.S. dollar, Turkish lira, which tried to sell off yesterday, which it did. Look at that. We had a short-term sell signal yesterday. Today it's coming back. I don't know. Do you want to jump in front of this freight train? See, as I'm going back further and further, you can just see this. Look at this has been trending. This is going back to August. Okay, so this look at up, 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 up. And that was before coronavirus. So does that mean that we're not going to correct lower and still come down back towards maybe even down by 620 or down to 610 here? Yeah, we could easily do that. Anything can happen in this volatile market. And with the sell signal, this is the thing this is where it's tough. Fundamentals and technicals are overridden when you have such a monstrous thing. I mean, we're at war right now. We're at war with the virus globally. I mean, whether you think it's not serious or not, you can't deny the numbers, and it's definitely having its impact on the market. So now, according to the way I trade, and then part you read my book, which I introduced in the beginning of the webinar, High Probable Japanese Candlestick Patterns. Here's your sell signal. This is a market I also tell people that unless you have deep pockets and you're an experienced Forex trader, please do not even try to trade this market. The spreads are so wide getting in and out that unless you're on the right side, you're really getting hurt on every trade. Unless you have a long-term trend that you can catch also, you're not going to, it's going to be very tough to be profitable in this market. So be very, very cautious. Granted, yes, do we have a sell signal? We do have a sell signal in U.S. dollar, Turkish lira. Does that mean that all of a sudden the dollar is going to make a turn versus all the currencies? Because it pretty much would have to if it's going to become a bear versus the Turkish lira. And here's another thing you want to take into consideration also. See how we have this major sell signal? This would actually have us coming down towards where we had that. Like somewhere around in this area, in the middle of where this correction was, that's where this sell signal has this market going to. With this volatility, it could be there in a day or two. But here's what I want you to look at. The last two corrections all happened in basically 1-2 trading sessions, and then it went sideways, bobbled around support a little bit, and then it built. Is that something that's going to happen again? Who knows? But it's very likely that we're going to have a similar situation with this. That within, markets go out like they come in. Well, this market hasn't finished coming in yet. So I think that this is just a corrective rally, just like we had here. It'll take a few more sessions to unwind and build this up, but I don't think that this sell signal is going to hold. But by, that's being subjective, and that's not how you're supposed to do things. Part of my system is shorting this, but also I don't trade the Turkish lira typically either because of the other fundamental parts that just make it too, the slippage is just too high. So, but this is a good indication of dollar strength. Once again, what do we have? We had a major sell signal here. We have dollar strength showing in this currency today. And in lieu with India going into shutdown and what's going on in Iran, how squeezed Turkey is, yes, I think this bull is going to stay. Now here's another one. You want to talk about an opportunity to go on spring break. If you could travel or wanted to take the risk, which you shouldn't be traveling and coming back from anywhere, you should stay local and keep things contained for a few weeks. At least you don't got to just totally stay inside. Just don't go traveling around the country like we have all these one of the worst things, all these colleges let out and sent their kids, especially from New York, all across the country. Hopefully this doesn't come back to haunt us. So the U.S. dollar is definitely showing a little weakness against the peso, but then look at how far this has come up against the peso. We have a pivot there. We're going to go off of a couple sessions ago at 23.47 for the lower pivot and the upper pivot at 25.46. This is another one, unless you have deep pockets in your experience in trading the FX market, especially with the volatility that it has right now, I think you should stay very, very leery and very, very away from this trade. This market could still head up to 30 pesos to the dollar. It can be back at 15 pesos to the dollar in another couple of weeks. This trend had been in a very, very long-term, progressively grinding lower bear market and has exploded out of it. Is it time for a correction? Well, it depends. This is not one of the stronger currencies versus the dollar, so this is you're going to see lots of volatility. I wouldn't doubt that we could see a correction back down to 22, 21 pesos, somewhere around here in this area, right in this area right here. But then get another rally, or it could be the failure. If this was the end of this rally and they come out like they come in, let's say that this is the top. Now we do have a signal potentially forming here, a short-term sell signal, but this is where I get very leery. Like we have a short-term sell signal in the Turkish lira, and now we also have one here in the Mexican peso. This is another one. If you read the book High Probable Japanese Candlestick Patterns, you will know what it is because it's shaping up right now. Yesterday was the beginning indication. Today's follow-through is not, it's not going with my dollar rally scenario. But where there's a rally, where there's a bull market somewhere, there's a bear market somewhere else. So the dollar may not always be strong against all currencies. We know that it's definitely kind of neutral and chopping around today, especially with the package that I got was approved in Washington. So right now we do have a sell signal in the Mexican peso. If you're a bear, I would say use 25.46 as your risk. Anything above here, you should not be short. You cannot fade this rally. Do not try and get in front of this freight train. It could get very whippy, and it's very likely that if your stops are tight or even wide, you can get really quickly stopped out, and then all of a sudden the market's back in your favor, or would have been, don't even put yourself in that position. But if you want to go with a sell signal, and especially if you read our book, there you go. It's already hit there, and we're looking for a break back down in this area. But this is only on a technical thing that right now we think is overridden by the virus. I don't suggest you even think about being on that trade. Now, if we get below 23.47, obviously that means that the sell signal and the correction is in place, and that then we fail below there. Then we're pretty much coming into our target range already. So, like I said, I suggest not taking this trade. I don't trade the peso typically, and for multiple reasons, just because of the liquidity and the spreads and whatever. But there is a sell signal, and that's giving us an indication about dollar weakness, maybe turning into the that will, roll over into the other currencies. We have the U.S. dollar Canada. Also, we have it under a little pressure today. This is another one. We are long this one. Remember, we were long before, and then we took a profit. It was only a few pips because the market snapped back. We had been riding this for, that was almost as long as we had these other trades on. So a slight winner would never let a winner turn into a loser, that when you had a lead like that. So we definitely kept our discipline there. Not very much of a plus, and it only basically evaporates part of the loss we have on this one right now. So, but our stop has been raised a little bit, is obviously a little bit lower than where we had on our other trade, but we had a swing trade entry point on this one as well. So we're still a dollar bull. We'll see how this happens. Right now we are taking pressure, a little bit of pressure on this trade. So the U.S. dollar Canada, we're going to key off the high from a few sessions ago as well as the low from a few sessions ago. So $1.41.49 and $1.46.76 are our breakout pivots. Look at that range. That's it's so odd to talk about these pivots because we're talking about these all. This happened within a period of a few sessions. We're only 3 sessions out from when we had set, or 3 or 4 sessions out from when we set these extremes, which normally would be something you would see on like a weekly chart, not a daily chart. So it's very, very interesting times we are living in. But as you can see, we're winding it. The market is winding its coil. I'd be very cautious being a dollar bear right now. Not that this is not going to happen. It's overdue. There's a gap to be filled here. But I just think that you get your biggest rallies in your bear markets. And I think that the world's looking at the bounce in the U.S. stock market and the calm, fairly positive response today, at least earlier, how the market was trading. That's, I think, a trap. It's just a bull trap. Some people could say other words instead of bull trap. We'll just keep it at that. So I'd be very cautious once again with that, and we shall see how this manifests over time. So we looked at the trades that we have. We're long to U.S. dollar Canada, taking some heat. We're long to U.S. dollar Japanese yen. You know what? Let's go back and see if that's started to poke back at resistance. This one seems to kind of just want to buffer up against the highs of the day. Hey, there we go. All right, so every once in a while something happens. So this one's looking like it wants to make another high, even if it's only slightly higher, if it follows the history of the past few sessions, but that's still good for our trade. We've been long that for 2 weeks. And once again, we're looking for that breakout to the upside. So let's do a quick review of our trades, and then we will end this webinar. So we'll see how things have changed since we started the beginning of the session. All right, remember, once again, we have the British pound US dollar where we are technically short because we sold the binary options. We are long the US dollar Canada in the from 145 quarter in the binary options. We have the US dollar Swiss, yeah, right, from 98.75, and then we also are long the US dollar Japanese yen in the binary options as well from 111 quarter. So we have the yen, which is both trades are now a plus and doing well. The yen, we've been working for a couple of weeks. Since our target's 113, in the way it's grinding higher, we may be still long this for another week. So we definitely shall see how this manifests. So once again, the U.S. dollar Canada trade, we're bullish in both the binaries and the FX derivative. Taking a little bit of heat right now, but we shall see how this turns around. So we spiked lower the other day. The past few sessions, we've been just bobbling around. So I'd use cautious. I think range traders are having a little delight right now. Not too much action, but at least they're making some money. Bulls and bears, well, kind of like just spinning your wheels right now. But I think that overall the U.S. dollar bull is going to come back with a rager. So let's look at the pound U.S. dollar, which had made the higher move high today, and look at how it fell apart. And since we have started this webinar, it still has made lower move lows once again. Does that mean it's not going to go flying back to the highs? No, it doesn't. But right now it looks like we have a rejection of the higher move high. That's a good indication that we will see a little more upside momentum in the U.S. dollar. Remember, the U.S. dollar, the British pound is the biggest, is the second largest component of the dollar index. So with the pound being lower right now, and now let's go to the U.S. dollar Swiss. This market is only slightly stronger versus the dollar, so this isn't hurting the dollar index too much. So we have those lesser currency crosses. Obviously that the dollar is showing weakness right now, but not with the second biggest one in the index. And the Swiss is also not too strong. And now here's the euro US dollar. Only slightly positive on the day. This market basically has not moved since we started this webinar. So once again, these are things to pay attention to and be mindful of. We'll see how these things manifest. We have the trades that are already initiated. Those were working. Those other two that we announced, those signals, hey, like I said, these are just examples, and I also warned that those are not good markets to trade because you need deep pockets and a lot of experience to even have a clue as to what you'd be doing. But instead of wasting your money on those things, waste your time and just a few dollars on a book called High Probable Japanese Candlestick Patterns, available on paperback and Kindle on Amazon.com. And you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets in the Forex, futures, options, binary options, you name it. Read the book. It'll tell you how to use them in all these different markets. And also subscribe to our YouTube channel so you can see what happens, whether these signals manifest or not, in our next video. And also want to help yourself keep track of our trades and see how we're doing. You may like it enough to subscribe to our Signal service and just have your own broker connect, and you handle all your own. It's still your account. You just set the amounts and start following those signals as well. So you can find that information out at www.forex-trading-unlocked.com. And